sure mute everybody. Okay, welcome everybody. Let's see. Okay, so a bit of a busy week. I will say I think I had some winners this week. Luckily, no losses this week, but I did miss out on like two pretty big, not big, but like I did miss out on two moves this week, which I kind of didn't like. And they were 100% my mistakes. Let me move the chat here. They were 100% my mistakes, so we can go ahead and review that. But yes, go ahead. Scenario one. This week it was only S&P and Gold, which seems to be my go-to pair at the moment. It's only been like 3 weeks since I've started this, so I do want to see how this proceeds. But I haven't really been trading much of NAS. It's only been SPX and Gold. So first scenario, all right. I understand that from a directional bias, this is internally bullish, and we did have a CBOS. Therefore, wherever the solidified low is, which is not in this picture, there's, let's say, X low here. Once the CBOS occurs, this does not mean that we want to sell here. That does not mean that that is what we do, right? So we have to obviously wait because this is the beginning of the pullback. So once the pullback is essentially solidified, then we have a move into the upside, which means that we should still anticipate this high to be ran. And after that's ran, we have no idea, right? So as I am looking at this, right, my high is essentially ran. Not immediately. We do create equal highs, and then we kind of have another minor pullback, and then we sweep this high. Right, but once we sweep the high, right, I have to understand that once we have this internal structure break here, let me actually do that better for you all. Once we have the sweep here, obviously this has already been swept, but once we have the sweep here, that means that this low is solidified. So once the solidified low is then broken through, okay, now I can at least anticipate price to take out this low, right? Because after we take out this low, maybe the inverse can happen, and then we can continue higher because of the directional bias. So the reason, pretty much the deal breaker with this scenario is that the solidified low sweeps the high, which means that, which is what makes it solidified, then is taken out so that we can get the reversal into the downside. And fortunately, pretty much got that kind of to the T right off of the bat. And after this, TP was hit, move on, done for the day. I think this continued a bit lower. Let's actually go ahead and check. This is Monday. Oops, wrong page. Let's see. I think this was Monday, so right around here. Let's see, Monday. Why is this? Hold on, guys. I don't know why this page is messing up. Sorry about that. Can you guys still hear me? Yes or no? I don't know what's going on with this.
Yes.
Okay, it's just Safari tripping. Okay. Okay, yeah, it's this page. I don't know why this is. Okay, here we go. Sorry about that. I don't know why that's going on, so let's see. Okay. See, like, I don't know why this isn't letting me see the time. Okay, whatever. I am not going to stress over that. Whatever. We can come back to that later. Anyways, scenario number 2, I don't know why that page is messing up. Scenario 2 is more of a traditional setup where we kind of look for the continuation into the upside based on a bearish to bullish transition. So where does that bearish to bullish transition occur? Obviously our direction is bullish at the moment, right? We have our CBOS. Why? Because this is the final solidified low that came into, or the final break, I'm sorry, that led into the high, which is then the high of the range after that break. So once the high is solidified, we have a pullback in play. So obviously, because the pullback is in play internally, you are technically bearish, right? So if I'm looking at structural ranges, then I can anticipate high into low, break, high into low. So once that high is broken, right, technically that is still a CBOS. So because of this break, I can still anticipate this to continue lower without an extra transition. So we have a high into a low into a retracement. But internally here, there was a structural disruption, which you can see here. There's kind of a structural disruption here. I'll actually come back for this one to show you all. But because there is an internal structural disruption, this is now unwillingness based on high-low retracement. We are now in alignment with the external structure, and I'm going based on the final sell to buy zone. So if I go based on the sell to buy zone, then I can anticipate potentially a move into the upside. But unfortunately, I did take this relatively late. This was pretty much after the overlap session. So because that was after the overlap session, I was actually kind of stuck in this trade for a couple of hours, right? And I had to actually end up waiting for the new day to open. So I did not want to eat those swap charges, but it is what it is. However, what I did find interesting here was when I needed to move my invalidation, right? When I want to move my invalidation. So because of, right, the internal move, the internal structural disruption, which was here, right, I wanted to wait for the whole bearish range to be taken out before I move my invalidation. Because in order for this to fully confirm as external unwillingness, this needs to break, right? So even though I have my SL here, I can't move it until this is broken, right? So we did have a bit of no man's land here where we have highs and lows broken, but we do not have a clear sign of direction, right? But obviously, once we broke this high, that's when I moved my invalidation into, right, this low here, right? And the reason why I moved it into that low there is because if we have a bullish structural range here, then I want this to continue higher, right? So if this is to break, at least I will come out at break even, and I think that's okay. Or relative break even, right? After swap commissions, etc. It would probably come out to be about a break even trade. But fortunately for me, right after that, this went straight into TP, and then it came into the trailed stop. And this to me is, I don't want to say a perfect scenario, but this is how I want scenarios to play out. This is kind of how all of my AU, EU, GU trades earlier in the year would kind of play out, where when I first transitioned into the scalp model, I really wanted to not necessarily be perfect, but more than likely, if my TP is hit and then my invalidation is ran, then it shows to me that I had the direction right, I had the timing right, and I had the correct target. So to me, that is a highly efficient scenario where the direction is right, the execution is good, and my TP is good, right? So I was able to find the bias, execute on the bias, and exit upon the bias, right, in a right way. So that was a bit, I don't want to say a bit of a lucky trade, but luckily that did hit TP and we can kind of move on. But let me actually try to show you all that structural disruption just so we can go through that. Right, this is Tuesday 23, wrong page. Yeah, it was here. Right, so the structural disruption comes here. All right, so obviously, like I said, the leg is technically bearish, right? And we do have a beginning of a pullback, right? But here, right, we do have a high, internal high into a low, CBOS. There's a retracement. That retracement breaks preliminary structure. Let me note that so you guys can see. So the pullback of the internal high and low, that is then solidified because we break the internal structure, and then that is to break. So once that is to break, that is structural disruption, right? Meaning this is my invalidation for my potential timing of this to go from bearish to bullish, right? And that is that. Hopefully that makes sense. Does this make sense? Do you guys see the structural disruption here? And you guys see why my stop loss is here? And you guys see why my entry is here? Right? Yes or no?
X.
Perfect. Perfect. You entered on the flush pullback. Okay, cool. Which I'm assuming this, right? I'm assuming this. Yeah. I have no issue with that. Definitely no issue with that. If the only thing is that obviously your stop loss would need to be down here. That's the only issue, meaning that the RR would probably not be as good. Actually, let's see how it was. Maybe like a 1 to 1.8. 1.6. Yeah, you see, that was the only thing. That was the only reason why I actually waited for the transition. Because typically, like, I don't like to go below a 1 to 2R. That's kind of like my benchmark that I really like. I don't like to go under the 2R. Okay, but anyways. Next scenario. I think that's my winners for the week. I will say, I think the last two scenarios are two scenarios that I missed, but I was actually correct with the bias here. So, give me 1 second. So this was Wednesday, I believe, the 24th. Yeah, Wednesday. So my position here, right, is actually the external is technically bearish at the time here. The external is bearish, so I'm assuming this to be a pullback. All right, so the only way for me to enter based on, or to enter based on this bullish pullback is that I need a transition. All right, so my transition here is, this is more of a, I don't want to say that this was a mechanical trade. I do want to say there's a bit of discretion here because I don't know if you guys remember, but I did note that there's the people, I see this online a lot where people make fun of the whole SMC kind of logic where you kind of have equal highs are ran, and then you go down, and then that can kind of be memed as a head and shoulders, you know. But I don't interpret it as that, right? I don't interpret it as that. I interpret it from a Wyckoff POV. Let's see. Right, where we have liquidity kind of be generated, and then this is a great example here. Who knows who this is, but this is a great image here. Let's see. Okay. How I anticipate this, okay, why? Okay. Is we have a low not become solidified yet. Technically, it would be solidified after this, but obviously there's internal structure. So once this breaks, that solidifies the low. So because we solidify the low, right, we then begin the pullback, meaning we still have to anticipate this low to be taken, right? But we then have a sign of internal unwillingness after we have the break. And after that internal unwillingness fails to break previous structural high, that then comes to take out two solidified lows, aka liquidity is then being swept there, and then we kind of see the reversal into the upside. So I've been noticing that a lot over the past couple of weeks, where two solidified points kind of generate some type of liquidity, and then you kind of go into this type of move. Right, and I see two not solidified points, but I see two highs be generated, a potential lower high, and then we run through the liquidity, plus we have order flow disruption, right, because obviously this POI led us into that move into the upside and then broke through, right, but because that broke through, I'm still not going to sell here. I cannot sell here. Why? Because we have our structural low, high retracement, right, so we still have to anticipate, even if there's OFD here, for this to give me a move into the upside. I still have to anticipate like that SPX scenario where I still have to anticipate this to be taken, which, you know, obviously did not happen, right? But once I have the momentum then come into my favor, we then break that solidified low, which is the pullback low, meaning we now have unwillingness here. So because we have unwillingness here, my position was to take this move into the downside, right? and unfortunately, it actually did not reach. And this was a monster trade. This is a monster trade. I'm gonna come back to this one on the chart here in a bit. But unfortunately for me, I should have used the entire buy to sell region, right? Because if I use the entire buy to sell region, right, I'm now using a higher time frame move, so I can now target here. And the reason why I target here is because we have relative equal lows. So I could have targeted here based on the buy to sell, but it was a bit greedy of me, and unfortunately I just did not reach the trade. I think it missed out by like, let's see, about 7 pips maybe ish, less than a point. So it is what it is. And we can actually come back to this one just so I could show y'all. But this one would have been trade of the week if I'm being 100% honest. Right, because this is the 24th. The 20th. I think that was here. Let me see what time this was. Right, 11. Yeah, that was that here? I'm sorry. Hold on, guys. I might be tripping out for a bit here. 24th at 9, 10, 11. No, this is the 25th. Yeah, that was here. Right, so this was here. And my scenario, like I told you guys, was based on this final buy to sell here. That was what I was anticipating. This was what I was anticipating. And I wanted this to kind of give me a run into the downside. But unfortunately, that missed out. So what I should have really done here is use the entire buy to sell so that I can come in and take this scenario, right? This should have been my scenario, right? I have to use the entire buy to sell, and I cannot compromise on that because I will miss out on trades. Because if I use the entire buy to sell and I have the right timing and the direction is correct, because like I said, I was looking at this as a pullback of the external. I saw this as very bearish, right? So obviously the previous day I was bullish. We had relative equal highs, and then we had the transition. That's why I aimed for the bullish highs. But the next day I did anticipate potentially a run into the downside. And this could have been even better of a trade, because I probably could have swung this, and as you can see, this would have been a monster scenario. You see what I mean? Obviously I probably wouldn't have swung it, but right, it just goes to show that if it favors the external, then you can really just kind of milk this out. And this kind of didn't even give a decent pullback up until the next day. So overall, it's a very good scenario. I'm just a bit disappointed that I missed out on it. So move on to the next. Okay, this was yesterday. Once again, this was my scenario where we were bearish based on the previous day, which was the scenario I just showed y'all. We were obviously externally bearish, and internally we were also bearish as well. So my trade here, right? I was a bit late. I'll tell you guys which scenario should have been my trade, but my scenario here was based on a liquidity grab continuation, right? Because we swept the high and then we caused an LG, which favors the external direction. Excuse me. Right, and from there, I kind of wanted this to give me a pullback and then come into the low, but unfortunately, this kind of came in and didn't give me my scenario, right? So what I should have done here is just like the previous scenario, where I should have used my entire buy to sell move, right, as the POI to then come lower, right? And this is something that is it still kind of not confuses me, But it's very interesting to see when this stuff happens, right? When we come to this scenario, I'm gonna delete this. I didn't take this. This was just a back test. When I see these types of scenarios where I have my POI and I'm aiming for a previous low, right? If this does not pull back before it hits this low, then it completely invalidates the setup, right? I do not want to take a setup. If this takes my target, then comes back to my POI, right? Just like, which is pretty much what it did here, right? Like it would have hit my TP, right? Technically, right? Even though it had already hit my target before it came back into the TP. But the reason why I would be against this, right, after, and this is a rule that I have not changed and I do not plan on changing. It's where if the reaction occurs before my POI is now invalid, right? Because the probabilities of this coming back and then doing the same move is a lot less likely. And the reason why I say that is because we don't want moves like this. We want moves like this, right? Because this is now weak order flow and this is strong order flow, right? Because if we have multiple mitigations, then eventually it's going to fail. And I'm pretty sure it failed. I'm not sure completely. Let's actually see. Yeah, see, this ended up failing because there's too many mitigations in play. There's one mitigation, two mitigations. There's actually a mitigation here, which is 3, another mitigation, which is 4, and then this does continue, but then it ends up reversing, right? So I'm not too worried about these types of scenarios, but it's a rule that I am still not going to negotiate on, where if my reaction is given before the POI, I will not count the POI anymore, right? Also, because this now causes a sweep and we then break, right, internal structure, that's a bullish LG, meaning that if I want it to be bearish again, I would need this to break and then give me a reaction into the buy to sell, and then I can be bearish again. That's the only way I would compromise on that, right? But obviously that did not happen. This ended up just touching the TP and then kind of just continuing lower. So it is what it is, right? And that was my final scenario for today. A lot of great scenarios. I will say I'm becoming very proud of the fact that I don't lose often, but I don't like the fact that I do miss out often. Because it is at the end of the day a cost of time, a cost of focus, right? And who knows, maybe in the next couple of weeks I could just be on a massive losing streak and GG, you know. But yeah, that goes to show my trades for this week. What do you guys think? Do you guys, let's see, do you guys have any questions, concerns? If not, we can get into case studies right away. Here we go. This is the scenario from Monday. See, this is a lucky scenario for me. This is kind of what I say, where you have the direction, the timing, and the target right, where the direction, although is technically bullish, because of the sweep and the break, I have a reasoning to anticipate this to continue lower. So the direction for the moment is correct, the execution is correct, and the target is correct, because obviously after the target was done, the inverse happened, right? And we actually had an internal SD, and you probably could have bought from the buy to sell, and you aim for the high, and that's another scenario, right? But typically that's not something I do. I don't like playing within ranges like that, where you take out a low and then you take out a high, just because more than likely that's no man's land. But yeah, either way, that was the first scenario. Let's see. Yeah, it was down there, 1.75. Yeah, anything below a 2RR is not the best for me. Turtle soup, I don't know what that is, bro. Don't know what that is. You missed OFT maybe in the last scenario. This is the only S&P scenario for the week. This was the first one. ICT term. I don't care about ICT. Fuck that guy. Do not care about that guy. Where target hit before your POI tap. That was gold, bro. That was gold. That was this one. This right here. Micro OFD play. Where? Oh, yes. I'm sorry. I'm sorry. I completely forgot to bring this up. Yes, 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 yes. I forgot to bring this up. This was the scenario that I should have taken. The scenario that I should have taken was this original POI. This is the scenario I should have taken. Why? Because direction was bearish, pullback is bullish. We do have the OFD here, as you mentioned. There is an OFD, but we also failed to break a high, and then we break a low. So this shows unwillingness. So yes, there are equal highs here, but you guys know that that liquidity does not dictate a bias, right? At least pending liquidity, right? Let me reword that. Pending liquidity does not indicate a bias. Sweeping liquidity is an indicator of bias, right? That's why the whole sweep occurs, right? That's how the sweep model was created, right? Is liquidity being swept so that we go in the opposite direction because inherently liquidity is fuel. So we have the unwillingness here, and then we have the turbulence point because this is technically a buy to sell. So we use the buy to sell. This should have been my scenario. No, you're 100% right. This should have been my scenario. And unfortunately, I just saw it a bit too late. Like I saw it when this was already breaking here. That's when I saw this scenario. And that would have been a great R trade, 3R, you know. But yeah, we can go ahead and get started on these case studies if anybody wants to show anything. Oh, yes, you mean missing out on a scenario because it just occurs too quick? Is that what you're talking about? Yeah, that's just the cost of being a scalper, bro. That's the cost, right? Because these scenarios are so fast, right? The barrier of entry to a lot of these scenarios are seconds, you know, like for example here, right? The barrier of entry to get into this buy to sell is a minute max, a minute and a half, maybe. Yes, exactly. Even if it's in front of your eyes. Exactly. Yep. I completely understand. Where the barrier of entry here is a minute, minute and a half. So you have to get in within that minute and a half in order to get the scenario, which is the hardest part about being a scalper, in my opinion. Which is why I've been really focusing on buy to sells and sell to buys. Because let's say this buy to sell occurs, I have a bit of time to kind of prepare myself for the trade, right? And that way I can execute here. I have a perimeter. I have enough time to see how much my stop loss will be and what kind of lot size I will use, etc., etc. So it gives me a bit of time. That's why I use the entire POI here.
Hey, Fred, I had a question because I understand what y'all are saying, but based on how we wait for, a disruption or a failed, a move, however, based
Even
on
if it
like these
fails.
structure points,
Mhm.
couldn't you just put like alerts at the high and low so when you do have that break, you can be attentive to look for that POI to occur,
I mean,
like move,
you can. That could be a
especially if you're not looking at too many peers.
yeah, it could be a solution, but like I'm on my desk regardless, bro. Like I'm looking at this pretty much almost the entire time. And the thing is, it's not necessarily that I see a scenario and that I'm missing it. It's that I'm seeing the scenario after it's occurring. Does that make sense? Like I didn't see the
Say that one time.
scenario. I didn't see the scenario until it was playing out. I didn't see the scenario as it was being created.
Right. Which I understand. Okay.
So like I didn't know
I
this
mean,
was I didn't know this was a potential trade until after it had already moved. That's why I tried to recoup by catching the immediate continuation. That's why I was looking for this. I didn't see this.
okay, right, right, true,
I didn't.
true. Because you did
I
Explain
didn't
that. That's
know.
right.
Yeah, I didn't see this occur until this was already like here.
Yeah.
So having an alert wouldn't have helped me here, you know? It's more so just a focus thing. It's a focus thing and it's a knowing your rules thing.
Okay.
Yeah, this would have been a great R as well. 4R. Being a scalper, we can't mark these points. We need to be on the charts for long. I mean, not necessarily long. Yeah, I guess long, yeah, because if you're a swinger intraday trader, you can really find your scenarios within an hour. It's either there or it's not. But as a scalper, you're going to see 2 to 3 sets of moves kind of form during one session for 2 pairs, you know? Okay, this is, let's see. So I think I'm going to go through, okay, one, bearish, internals bearish as well. And this is bearish as well. Okay. Bearish. I do consider this here and this here to be no man's land. I wouldn't have taken this scenario. I wouldn't have taken this scenario because you swept the high and you swept the low. And then you came and swept the high again, and then you came and swept the low again. So you're in a consolidation, bro. So any sell here is to me a guess. You're kind of guessing that this is going to now revert or now continue, sorry. So I'm happy it worked out. It worked out because your direction was correct and the timing was correct. But to me, it's just like whenever you have sweep 1, sweep 2, sweep 3, sweep 4, why are you not anticipating this to then sweep 5, sweep 6, sweep 7? Right? It's just the timing thing. How can you anticipate this to now finally reverse? You know, that's what I don't like about this scenario. Like if anything, you have liquidity be swept, right? You have the transition, you have the order flow, and then maybe here you can take either a POI move and then aim for a previous high or aim for relative equal highs or something like that. But that is based on a picture that is painted here. I think you're guessing when the timing will occur. If we look at solidified points, okay, let's look at solidified points. Not a solidified low. If we're looking at solidified points, this is broken, this is now solidified. 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 These are all solidified points, bro. Yeah, they are still bearish, but the thing is, bro, is I don't want to be perfect because you're trading CFDs, bro. You're trading CFDs. So you maybe on this broker, this did not break a high, but maybe on another broker, this did break it. Like I don't want it to be super super close. I want it to kind of be very noted. So like for example, if anything, I would have maybe seen this as a sweep, then maybe we have a move, and then maybe I could have taken a loss, but that is a reversal. So to me, this feels relatively forced, bro. Because how did you know that this was going to now reverse here? How did you not know? Like, how did you not know this was maybe going to reverse here? You see what I mean? Because you're lucky that it reversed when you wanted it to, but this is how you can get caught up in the trade as well. Maybe you can get caught up in here. So now, okay, when do you exit? You know? But yeah, and also I don't agree with the OFD. This is not a POI based on this time frame. This is not a POI. Not to mention there is no reaction. So yeah, luckily it did work. I don't like the scenario. I don't like it at all. Okay, let's see. Anybody else have any more case studies to go through? How do you do one? What? How do you do what? Okay, picture one, a case study. If you have watched any of our Zooms, you know how case studies are done. One, okay, two, okay. See, perfect. I like this. This is great. This is great. Bearish, right? Obviously, the external is bearish as well. You have a target that you're basing on, based on the external time frame. Yeah, first timer. Okay, yeah, you're gonna have to just watch, bro. You don't ask questions. Just get yourself involved with the group, watch the content, and then you'll see how stuff rolls here. But yeah, I do like the scenario. Bearish. We do have the external target, and you do have the LGC, which is textbook, and then you have obviously the move here. So luckily, this did not hit your stop loss, but this is textbook. This is good. This is good. And you could have even taken the second scenario as well with the buy to sell. Right? And even if you missed out on that, you could have the POI and then you have the buy to sell here. Okay, that's good. That's good. But yeah, you definitely could have entered here as well. And that's the one thing that I'm still 50-50 on as a scalper. Like, should I take every scenario that I see, or should I only stick to seeing maybe one or two winners for the day and then I'm done? And I'm kind of sticking to that in terms of maybe have one or two winners and I'm done for the day, just because I don't want to get too greedy. But yeah, still very good scenario. One, two, okay. Okay, bearish, and you're in alignment with the bearish structure. Great TP. There we go. Come back to this. So the transition, you have low into high, low into high, low, unwillingness, break. That is your structural range. And you do have the buy to sell here, so you could have used the entire buy to sell. I would use the entire buy to sell. Because then, if you use the entire buy to sell, you can aim for the low of this range. Right, if we come back to this one, right, if you use the whole buy to sell, you can aim for this low. Right, obviously if you complicate and add the internal transition, right, like see this should have hit your stop loss. This should have hit your stop loss. You know what I mean? So instead of worrying about the internal timing, just make it easy on yourself and just use the entire zone. This is already a refined zone because you're going off an external bias, which is this transition here. Yeah, because like it gets to a point where you already have the transition, then you want a transition of the transition, and then you want a transition of the transition of the transition. So like, where do you stop, right? And this is why I really just focus on the buy to sell moves, because if there's a buy to sell on M1, this is probably not a minor intraday, but maybe like a M5 POI, right? And if that's an M5 POI on an M15 bias, and you got everything correct, then that's probably a great scenario. You know, like this is probably a 1 to 4, 1 to 5, right? Because this did end up going all the way down. And the TP placement was very good, because obviously after liquidity is swept, more liquidity is needed to then continue lower. That's why it's a CBOS, so you now have high, low, retracement, continuation. But yeah, for the people that I wouldn't say are too skilled just yet, disregard this. This is 2021 content, I would say. This is us essentially over refining, which is not a bad thing if you can do it. But I don't know many people that can actually do it consistently, right? Like obviously Tam can do it, maybe Tomas can do it, right? A couple of other RCV members can do it. But for the most part, let me tell you, just use the entire zone. Like just make it easy on yourself. You just want to win, you don't want to be perfect. But if you can do this, all power to you, right? All power to you. External LGC, internal LGC. Yes, this is textbook. See how you use the entire POI and you don't wait for the over refinement here? That's what I'm referring to. Like, that's kind of what I'm trying to say. Right here you use the entire POI. And although it's a smaller RR and it is the M30, but it shows that price is fractal and that it works regardless. So this is kind of what you want. This is like this is my type of scenario, if I'm being honest.
I've refined it in the other links for you.
Okay. Let's see. Okay, cool. Yeah, see, so you use the entire buy to sell. This would have been maybe a scenario. And then once again, there's a buy to sell. But based on this time frame, you could have used this entire range, which is okay, but I'm not opposed to how you did this. Like there's always right now this is the biggest question that I ask myself whenever I'm looking at this. Do I use the entire buy to sell or do I use the internal buy to sell? And both of them work. It's just sometimes one works and one doesn't. So it just depends on how conservative you wish to be, right? Do you want to use the entire POI or do you want to use the internal POI? And that's just a personal preference thing. You will miss trades if you go for this, which is how I missed some of my trades that I showed you earlier. But either way, it's just like, do you want to be correct or do you want to be very correct? So either way, you're correct. So it's not really a problem.
All right, so like with that, now I have like 3 LGCs, and the last one I was waiting on a internal reaction for it, but I didn't get it. So should I just enter like
Just use the buy to sell.
and don't wait on any internal reaction?
Yeah, because you want to trust your directional bias. Trust your directional bias. You know, this is your invalidation is perfect. So if this is to hit your invalidation, then your bias is wrong. You know.
All right, thank you.
Let's see. I think I missed one. Okay, I didn't miss one. Okay, wrong. I need to see more charts, bro. I need to see more charts. I don't see enough here. Where is your bias being built from? Where is your transition? Where is your entry? Why are you entering here? I don't have enough info here. I don't know what's going on. I need everything. I need everything. I don't know why you're entering here. This is not an LG. Not an LG. So I would say the definition of your LG is wrong. I don't know why you're selling here because there's a clear low and too high. Excuse me. Sorry. But yeah, I don't know what's going on here. Okay, I see. So, let's see. Is this a break of structure? Sure. There is a high into a low, into a retracement, into unwillingness. Liquidity is there, but that does not mean that you're bearish. There is a bullish break here, right? So now we can zoom in to your other photo here. So internally, you are bullish, right? So this is the bearish pullback. So you need the transition to fail in order for you to be bearish. So if anything, you cannot be bearish here. If you're bearish here, then this is your TP. If you're bearish here, let's say you're at a POI, then your TP is here. But this, for you to want to have this, then come into here, I think that's a bit greedy. I do not agree with that. Right? And what is your definition of a liquidity grab? What is the definition? Because this is not a liquidity grab. What is the definition here?
So sorry, I need to study better this concept, but for me it was like to take a new high, you know what I mean? So
But is that
and
not
then
a break of structure?
what?
Is that not a break of structure, a new high?
Sorry, no, just that pin over there and just back down because for me in the day it was like another low to be made, but I got it wrong.
Okay, I'll make this simple then. The liquidity grab is not here. The liquidity grab is, let's say, an example here. Where do I see a liquidity grab? This is a liquidity grab. When you have this, like you got this part right where when you don't fully take out a low or a high, you don't substantially take it, but then it breaks the structure. So this is where the LG is present. Not here. This has to happen so that you can call it an LG. Right, so let's see. We have a bullish structure. We now have bearish structure. So now if we have a small break and we have a bullish break, this is an LG. But this is what confirms the LG. Does that make sense?
Yes, thank you.
And then if you use the LG like that, then for example, then this is a sell to buy. So you can use the entire zone and then you can buy and you can target previous high, and that is a textbook trade. Plus there is an internal break here. This is order flow disruption, which is one of the models, right? But yeah, you could use the entire sell to buy and then target previous high and then go there. So the execution, your execution here, why are you selling here? Show me why you're selling here. Let's go internal.
Sending you the chart on 15 timer.
Okay. Wherever it doesn't matter what time frame, I just want to see why you sold here.
Because for me, basically, the vision was like bearish, and I was just trying to spot the new, mitigation where it could happen. And I was seeing all this one up and getting filled, not break. So I was thinking, okay, maybe it's time now to go down.
Okay, so this is probably like an M5 entry, or is this off the M15?
I think it's M5. Yes.
Let's see the M5 so I can show you my point. Okay. Okay, so I see. So you see, this entry is good. The entry is good. Why? Because you have a buy to sell. You came in, you mitigated, you have a transition, and you have a POI. But I would more so just to be safe. Where is the final buy to sell? This is the final buy to sell. So I would enter here. And my SL is here. So the thing is based on this trade, my target is here. This is my target. This is my TP. And this is maybe a 1, 2, 3, maybe. And then this would be a perfect trade because I have a POI, I have a transition, I have a buy to sell, and I have my SL at invalidation, and I have a good TP. And notice that once your TP hits, this would have came and hit your break even. If you had a break even, right? So,
Yeah, I didn't have a break even because I knew that the price basically was going to now to again take it maybe going to break even, go down. So I fortunately closed this in profits,
mhm,
But I think that I get wrong the structure sometimes because I have to understand better some concept
mhm.
of the whole thing.
But yeah, I would find TPs based on where your entry is. So if you find your entry on M5, your TP is on M5. Because this way you get the whole move, you're done, and you can go do other things. But if you wanna focus on the bigger picture, which would be, let's say, here, if you want to focus on this bigger picture, okay, let's find a scenario here as well. This would be my buy to sell, but my TP could probably be liquidity here, or it could be the inverse sell to buy. Let's say scenario number 2. There's obviously a bearish break. Let me actually show that. There's a bearish break. There's a POI. So based on this POI, my TP is here. No matter what, if we have a structure and I have a POI here and then we have a transition, then this is my entry and this is always my TP. Because if you are right directionally, the model and your SL and TP are set correctly, then you will more than likely not lose many trades. Because you can only lose a trade if you're directionally wrong, if the timing of your execution is wrong, if the parameters are wrong. Let's say you have your SL not at an invalidation, or let's say you have a TP that isn't here, but maybe like at an external high. Like let's say you have a TP up here, then that's technically wrong. Or if you don't use a model, right? There's only a certain amount of methods, or there's only a certain amount of ways that you can lose a trade, which is directional, execution-wise, management-wise, or perimeters, right? If the perimeters are wrong, then you might have had the right direction, the right trade. You just set the wrong perimeters, right? If the direction is wrong, then maybe you were looking for a reversal. If the execution is wrong, then you maybe weren't using a model. Or you maybe were using a model, but maybe you weren't using it correctly. Maybe you haven't fully tested the model, right? Like there's only a certain amount of ways that you can lose a trade. So if I can now get the direction right, the execution right, the perimeters right, and the target right, then I'm more than likely going to get more winners. That's kind of how I look at it.
Okay, understand. So, yeah, yes, for me it's kind of new this one. So I'm back at trading like after 1 year because I stopped because I was like not having any kind of reward. But
Mm-hmm.
like how you style, I'm understanding everything. So for me it's kind of new. But what I'm trying to understand is that I find myself having trouble to the next move because I see that there are new highs, new lows. I get the direction, I
Mm-hmm.
take like the position, but the position then come back.
Mm-hmm.
And oftentimes I find myself in this tricky situation. So I have to get better in this, and for sure I have to watch more videos and repeat
No,
them.
yeah, like this is all right. Like you have a POI, you have a buy to sell, so meaning you have a reference point, right? You have the reference point. Internally, you are low, high, low, high. Once that low is broken, maybe there's a buy to sell that causes that break. Because if this break means that the POI is valid, so if that means that your execution, right, is good, but like I said, I want to make sure that I get in the trade, so I would use the final buy to sell, and then have my stop loss at the high, and I would target the previous or the immediate external low, which is here. So if we look at this, I think this is a 1 to 3 maybe. Let's see. When was this?
This week.
July 20, 23, 24. Is it here? Okay, I'll just go to the 4 hour. Let's see. 4 hour, that's swept. 24. I can't find it. I don't know where it is. Unless you can tell me where it is, I probably can't find it.
Yeah, I can see it.
If you could just circle anywhere.
Where is this thing?
Is it here?
Yes, it's kind of there. Yes, exactly. I'm using FX GM and you're using Oanda. Maybe the data is different a little.
It's okay. Okay, see, it was here. Okay, and this is what the point I was trying to make to raise earlier. So you see how on FXCM, where is it? Sorry. On FXCM, it did tap the M5 POI. You see, it did tap it on that, but on Oanda, because we're dealing with CFDs, see, it didn't touch it. This is why I don't want to be perfect. I want to use the entire move, which is here. If I use this entire move, because we have the buy to sell here, and then we have the reaction, and then we have the pullback, then I have to aim for my previous low. So if I want to be very conservative, I can put my stop loss here, because if the POI is to break after the reaction, then that is order flow disruption. But more than likely, I will put my SL here, right? And my TP is here, and that is a 1.3.5. I won a 3.5, which is very, very good risk to reward for this method of trading. And just like that, you achieve TP in let's say an hour, a couple hours. Wait, did I get this right? Let me see. Let me go to your scenario. No. Nope. No. Sorry, it was this low. Sorry, it was that low. This low, sorry. I think it was this one. It does look very different on Oanda compared to FXCM. But yeah, it would be that low. I'm sorry. It's not a 1 to 3.5. Sorry, it's about a 1 to 1.6. So not the best RR, but this is how I do most of my trades these days. Is look for the immediate external low, aim for that external low. And sometimes it will be under a 2R, but 2R is usually what I want it to be. I think one of my scenarios this week was a 1.8, but the rest of them were about a 2.1, 2.5-ish.
Understand.
Mm-hmm. But let's say if you wanted to aim for this low, then I have to take the entire buy to sell here. Because this is a higher time frame POI, I have to take that entire POI. And if I want it to be conservative, I could put my SL at the high, or I could put it here. But you see, this is how I would aim for this previous low. Because this is the buy to sell that caused the disruption, so I can then aim for a previous low. So it really just depends on where you want to aim, what perimeter you will use. So if you use the internal perimeter, which is here, then you have to aim for the previous low, right? Because you're using the internal perimeter. But if you're using the external perimeter, then you have to use the entire zone, and then you can aim for the previous low, right? Because obviously when we manage the trade, then once we break here, then we have an LG, so you can move your stop loss here, your invalidation from there to there, and then once you break this low, then you can move your invalidation from here to here. Does that make sense?
Yes. Yes.
Cool. It's all time, trust the process. Yeah, man. You just have to trust you have to trust yourself. Trust yourself. OFD. I don't see the OFD, but I do see the LGC.
So I use the inefficiency, but you can also use the full buy to sell.
This was today, I'm assuming. It was today, right?
Yeah, this is today. Yeah.
Yeah. Okay. But
You
yeah,
see
I
the
do
full buy to sell before.
at the end of the day, it's just the LG.
Yeah.
But yeah, that's good. I wouldn't have moved. Actually, hold on. We moved. I wouldn't have moved my SL just yet. I usually tend to wait for a CBOS continuation. So the only CBOS here is here. This is the first CBOS. So my stop loss is still at the same point. But
What
once
ab- what about
this
one
leads to the
before?
break here.
What about the CBOs before, like the rally that goes up before the low that you have there?
Which one?
The middle one that you've drawn.
This one?
Yeah, what about there? Like right here. It's not that a CBOS before.
That could be. No, that 100. That could be. Yeah, that could be. But if
Yeah,
you
so
look
that
at this low,
that's
high retracement, that is
okay, so that
broken. So, yeah, it's this is a confusing one for sure. This is a confusing one for sure.
yeah, so that's why I moved it, but because the rally from that middle circle that you have, it didn't create a high, so I just viewed it as a point of liquidity. I want to see it retrace, and I just dropped back my stop loss down to right there.
Okay. No, this is good.
Almost touched it, but it
I
didn't.
probably, yeah, I probably would have broken even on this one. Probably would have broken even on this one. Let's see how this goes. Okay. Yeah, you see, I probably would have broken even on this scenario. CBOS continuation, trailed stop, but we now have an LGC here. We have an
Okay, thank you.
LGC there, and there is a sell to buy. So this could have been my second scenario.
Yeah, I was gonna take a second entry there, but I didn't.
A sell here, and then that would have led straight to TP, and that's maybe like a 1 to 2. But yeah, this is good. Just a bit choppy. I hate when prices like this. If it's super choppy, I tend to stay away. I like seeing price action like this, not like this.
Thank you.
But yeah, overall, this is good. This is good. Well done with the trout stop. Okay. Okay, daily, I see. POI, bullish trend, I see. But you have to know that this is bearish internally. You have to note that, right? Even though you're bullish here, there is a break of structure. So this is bearish internally. Yeah, I don't see the, like, what is the reason for entry here? Why are you using this?
Because I saw something on the M5, but then it broke, so I just didn't got hit the stop loss because, I put it like a wider stop loss. But I thought it was a good trade for continuation. But I always, find myself in this tricky because I thought it is, I think this, going to be up, but instead it's like doing maybe a little bit of retracement and going then down.
Let's see the M5. I want to see where your entry is.
Okay, sending to you.
Okay, so this is the M5. So this is a CBOS, right? This is a CBOS because this is externally, or the internal direction, sorry. High, low, CBOS, retracement. So this is just the pullback, and we should still anticipate this to come lower. Is this trade right now? It is right. This is right now, right?
Yeah.
Okay. Yeah, I'm anticipating this to go lower, bro, if I'm being honest, because the CBOS, then the retracement. But it's just like, I don't know, there's no reason to buy here for me. There's no reason to buy here. Because like I said, like whenever we're looking at this, like I don't use top-down analysis, bro. I'm not going to say it's bullshit. I'm not going to say it's wrong. I don't care for it. Like, I don't care, as a scalper, I don't care what the daily is doing, bro. As a scalper, I don't care what the H4 is doing, because probably the H4 and the daily are relatively the same. So I don't care for that. But I do care about the H1. I do care about what the internal structure is. So my intraday, or let's say my major intraday, is bearish. High, low, this is bearish. So I should look for a bearish continuation. So I would more than likely look for something like this, just based on this time frame alone, and I would aim for the previous low. That's like the basic type of scenario that I would potentially look for if I'm just looking for a continuation. And that's assuming there is no model, right? If I'm looking at an internal, let's say now I have the H1 POI, okay, now I can go to my M5, and once we approach that area, then I can look for a scenario. But if I'm only looking at the M5 alone, I do anticipate this as a CBOS. So externally we are bearish, right? So let's say we are bearish externally. We have the LG, we have the buy to sell. So I could probably sell here, and I would aim for maybe a previous low. But if I'm trailing this, then obviously once this low breaks, then I can trail here, right? And then we have high into low here. So once this low breaks, I can move my trail stop here, and I can then wait for this to hit my TP. But because this did not hit the TP, it would have hit the trailed stop, and just like that, I'm out of the trade. Right? And then, because of that, then I can anticipate a move into the upside. Why? Because this is an LG, and this is a potential pullback of the low from the external high. So this is unwillingness because we break there. So potentially now here we have an LGC. We have an LGC. So we could potentially take a sell to potentially aim for the low. And once this breaks structure, you can obviously try your stop. It doesn't matter how. But once you have this high then fail to create a new low, then this is structural disruption, and this will be my exit. So even if I wouldn't have hit TP, I could still trade into the downside. But because I'm using M5 to take trades, I have to find my bias here, and I have to find my target here. I don't care about the daily. I don't care about the H4 if I am executing on this time frame. Does that make sense?
Yes, makes sense. But sometimes I just finding like M5 entries for just being more accurate. I can be a
Because you
scalper.
want high risk to reward, I'm assuming, because you want a 1 to 20, 1 to 30, 1 to 40.
Yeah, kind of, yes, yes,
Exactly,
yes.
exactly. And that's what everybody wants. But bro, what are the odds of you getting those types of trades? Just get your 1 to 3s, get your 1 to 4s. If you can get 1 to 3s, 1 to 4s, 1 to 5s, if you can get those consecutively week by week by week by week, you will do way better than the guy that's waiting weeks to get a 1 to 30, 1 to 40. That's greed. If you can beat that greed, then cool. You're now doing better than
Okay.
95% of other traders, you know? But yeah, wherever you're finding your execution, this is where you find your bias. This is where you find your TP, right? Because if I'm in an M5, then maybe the H1 can work if I want to find like a POI. But in terms of finding direction, maybe an M15, M30. Because I could use the
Okay.
M5 to find my bias, and then internally I could find models on an M1 and then aim for these M5 lows. For example, let's see, let's find something here. So we have the LG, like we said, and then we have an LGC here. So if I have a POI here, right, then if I zoom into M1, maybe there's a transition here. And if there's a transition here, then I can aim for the previous low. And this is a 1 to 2 in a matter of like 15 minutes. Right? Or if I was to miss that trade, let me move my chat. Then we have a sell to buy, which created this move here, which led to not breaking the previous low. So I can use this as a previous move. So let's say I was to zoom into M1 here. Maybe there's a model I can aim for here, and that once again is a 1 to 2. The reason why I will not aim for a transition here and TP here is because this is a sweep, potentially. So maybe this can then come into the buy to sell and then melt. That's why if I'm looking at a transition here, I will aim for the previous or the first external higher low. Or if I'm aiming for here, then maybe you can aim for that. But you would need to put your stop loss here. So you just have to figure out what type of trader you want to be. Do you want to be a swing trader? Do you want to be a scalper? Do you want to be an intraday trader? You got to choose. Because
Right.
doing multiple at the same time is a bit difficult. I tried it. It's a bit difficult. So it's better to get one down and then try to add another one.
Yeah, it's kind more on the swing, but sometimes it's that
Okay, you're a swing trader. Then why are you an M5?
for finding better entry.
No, use the same time frame. Like
The H4,
you could use the
H1.
H4, you could use the H1 maybe, but there's no need. Like,
Yeah.
let me see. I showed you guys that page.
In backtesting, what I'm doing is that I'm just waiting a reaction on the point of interest, and then I'm looking on H1 for the entry. That's all.
Exactly. Then do that in live as well.
Yeah. Okay.
It just makes it easier on you, bro. It makes everything so much simpler.
Okay.
And if you want more of an intraday, okay, then use maybe the H1 and then zoom into M15, M5. And if you want to be a scalper,
Okay.
okay, maybe use M15, M5, M1. But there's no real need to go above H1 if you're a scalper M1, right?
Okay.
But yeah, just try it out. See what happens. Because also from here, like if we're looking at this from an intraday, like a very basic intraday is, yes, this is technically bearish, pullback high, and we're anticipating for this to create a new low. Then once we don't break the low, and then we solidify, meaning this is now a sign of unwillingness, and we have a break, then you can take the sell to buy scenario and you can aim for the previous high, which would have been here. And that's a 1 to 2, 1 to 3. And that's a textbook trade. So I rely a lot, bro. I mean, what would you guys say that I rely the most on based on what you guys see? Do you guys think I rely more on structure? Do you guys I rely more on liquidity? Do you guys think I rely more on models? Because I'll tell you what I think. But I want to see what you guys think. What do you guys think I rely on the most? Yeah, I would say, actually, let's see. Yeah, it's 100% structure. It's 100% structure. Because, yeah, it's structure. Structure is the number one thing for me. That's why direction is the first. That's why direction is the first step of the framework. If I can't get the direction right, it doesn't matter. These don't matter if the direction isn't right. Let's see. Okay. Sell to buy, I see. No. I like obviously, I mean, from a structure POV as well, if you just look at structure and you use buy to sell zones, then you will more than likely be fine. You don't really need models, you don't really need anything else because the buy to sell will give you the entry and SL parameters, and because you're relying on structure, you know where the TP is going to be, which is the previous external high or low. I don't like that this bounced already though on this picture. That is messy. Let's see. So I probably would have exited this early. Let me see where I would have exited. If this is the sell to buy, then this came back. I probably wouldn't have entered because of this bounce. I don't like that bounce. But it did come back into the POI. So let's disregard that. Let's say that did not happen. Let's say we came into the POI. Okay, we have an LG. So once this bullish is up and it even challenges here, I would put my SL here. So as this is continuing, we have a CBOS, and this is continuing higher. So if I see this, then break here, then I would exit because you have the reaction of the POI coming down. So maybe this is going to aim for previous lows. So I probably would have exited maybe around here. I don't think you manage your trades much, right, Raish? I don't think you managed it much, right? You kind of just wait for SL or TP, right?
Yeah. Right now it's just like that. But in this scenario, I did something.
Mm-hmm.
Actually, the thing was, you can just save this.
Mm-hmm.
So the thing is that at the very beginning of this, I would just anticipate a low. That's the liquidity grab, and then there was liquidity grab continuation, and there was a POI on entry that I have marked. I used 50% of that as my entry point. This was actually a drill, not like actual trade. And after that, the management was just at the very last area where I had a green line. I took 70% of my, like, I would have taken 70% of trade here. And then after that, you can see another green line down there on the right side at the very end of the chart. Yeah, there. Just,
Okay.
I just railed it to there.
You exited there?
It was
Okay.
just a rail.
So you see, based on structure alone, if we're looking at structure alone, yes, you included a model, but based on the sell to buy, this should have been your full TP. Just based on what we're looking at, right?
Yes.
Based on what we're looking at.
Yes.
So this would have been, right, wherever you take your execution, whether it's at the open or the 50. I've actually never tried the 50% of the buy to sell zone. It technically it should work. Well, I mean it does obviously. But
Actually, I just texted as well here that it's totally based upon the RR that I'm getting. If I'm getting less R on like 100% of the POI, then I will use 50% of the POI.
Mhm.
If it does not come to my POI, I will just miss it. No worries. I'm not taking very less. It's like rather good to miss the opportunity rather having a very little.
Mhm. Okay,
So,
I see.
and if you just see the externals where I have like set the target, which was actually my fault, obviously, because I'm going against the structure, and then I'm targeting like external, so it's totally
I see. I
messed up.
see. I see. But yeah, I also don't like the. I don't like that this is kind of like a range as well. Kind of like that first scenario you showed me. I don't like to play within ranges because of stuff like this. Like because of stuff like this. That's the only reason I don't like playing within the range.
Yeah, I'm still learning and trying to like figure out the no man's land. I'm
Hmm
not expert like practice that as well.
Yeah.
For the beginning, I'm working still on the models. I'm working on the directions. I'm working on the liquidities. Once I have like approximately straight 2 or 3 months in it,
Yeah,
more than
and
I
yeah, and the reason why I also don't like trading within the range is because let's say we're back testing a range, then I'm gonna justify a lot of moves here. Let's say I justify this, and then maybe there is a move here to then go higher. I'm gonna start justifying things, and I don't want to ruin my plan. I don't want to ruin my rules. So just know that the rules are based on movements from trending markets. That's why direction is number one. That's why I only focus on trending markets, not necessarily um, the any type of consolidation.
Yeah, it was actually bearish, right? And then there was just like this
Hmm
coconut, and I thought that we have
I see. I see.
a pullback scenario coming in. And then actually, the rules that I play off for this is actually like I could just have played it within this area as just mentioned
Hmm
that must be a break even though. So my actual TP1 would have been like here and TP2 would have been like here because I do it a lot of time. Whenever I play counter,
hmm
I'm just like targeting the immediate leg and then just taking the initials at the very real so that it assures me that I have some art for myself. And even though if I'm going to be break even, not going to be like on the negative side. So
hmm
this is how I go about. And in the drills, I do a lot of bad things. Literally, I like
A lot
uh,
of break evens.
try to act. No, like bad things like I mess up with the structure. I try to like manipulate the things as I'm thinking in the drill sections,
Hmm
in the real trade. And I think that actually it's affecting my psychology as well for the counters. Like
Yeah, I
I'm
mean,
drilling,
hmm hmm
I'm drilling, doing something wrong, and then like actually if I'm expecting that happen, obviously be going towards something wrong as well. Like real executions, if I'm gonna do like that,
hmm
I'm gonna like have to work about it as well.
Okay. Yeah, so just based on looking at this is technically bearish, and because this is bearish, that's why you have to TP here. Because after this is swept, you don't know if this can transition to the bearish, which is what the external is. You know, that's why you have to TP at the first external high because you saw a model present itself, I'm assuming. I'm assuming you interpret something here as a model, right?
Yep.
Yeah, so the model is correct. You just have to make sure you aim for the target that it's meant to target, right? Which is always the first
Yes.
external high or low. Because notice that yes, after your model was fulfilled, notice that's
Mm-hmm.
where the transition into the downside began. So once this
Yep.
was broken, you can use the buy to sell here, and you can aim for the previous low
Mm-hmm.
again. And just like that, you can win two trades. One is a reversal, one is a continuation.
Yep. Like actually, I just want to stick with my continuations. Whatever my real executions are,
Mm-hmm.
these are all just continuations.
Mm-hmm.
There is no like reversal of the counters.
Mm-hmm.
And I at least look at M15 or M30 for my scouts so that I assure myself that even if we are like on a 1 hour time frame, we are, you can say, the bias is bearish, and then there is a pullback that has started on M30 or M15, then I'm good to go with the bullish.
Mm-hmm.
I will like find my interest to continue in the bullish direction. Rest assured, I can't like take any of the counters based on that.
Mm-hmm. Mm-hmm. Yeah, I mean, technically, it would be a continuation because there is the structural disruption, but that's why you have to TP here. So technically both can be continuations, just depending on whether you're focused on the micro or the scalp. So
Like I avoid myself in these scenarios. Like if I'm not, for example, we are in a bearish market according to my bias, for example, it's 1 hour time frame, and we are totally bearish here.
mm-hmm.
Until unless, like for example, in 1 hour time frame, we are like doing this, 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 and this.
Mm-hmm. Okay.
1 hour time frame. This is my indicator, right? Then
I can't hear you. I can't hear you.
yeah. You can hear me now?
Yeah.
Okay, so like we are in 1 hour time frame here. This is the immediate leg of the bearish bias, and we have M15 structure like this. And in M15, if it breaks this point, then if there is a CBOS, then I can assume that we are going to be in a bullish. Then there is like pullback, and then signs of bullishness again in the lower time frames, and then going from up there to the immediate legs. This is how I would play counters.
Mm-hmm.
And when it comes to the in harmony with the external bias, for example, the pullback begins, then it comes down again. This is bearish, and this is like this. Then I can actually target some areas like this or like.
Mm-hmm.
This is
Mm-hmm.
how I add complexity. Is the little bit of complexity to my trades.
Yeah. It just depends on, because in order for you to do that second scenario, you have to acknowledge then the intraday side, the major intraday side. For example, because if you're here, like you said, actually, you're not too bad drawing. Like if we're here, like you said, then we have the CBOS, and then we have a pullback, and there's a buy to sell here, but there's a transition here. We have to aim for here,
Mhm.
because if
Yes.
then this is swept, then you can have maybe another continuation, but then it'll fail, and then here is where I can aim for the low, because it's in favor of the external.
Yes, exactly like that.
Mm-hmm.
And my
Because
targets, for example, in a 1 hour bias, if I'm bearish, and then I pull back, and again I have some internal transition, for example, on M15 or M30. Then my targets are actually at the very maximum M30 and at the very minimum M5 or M50. Like we are in harmony with the structure. Like 1 hour is bearish, M15, M30 is bearish, M5 is bearish. Then I can obviously look for high target.
mm-hmm.
This is how I just interpret it right now. Maybe it will be even better with this as well.
I see. What is the meaning of disruption? It means something failed. It just depends on what kind of disruption. That's all in the book. That's all in the book. Like, let's see. RC. Yeah, the book. The book has everything that I use. So this is the. Oh, this looks ugly. Ugh. Sorry. The book. But yeah, probably will refresh the site closer to the end of the year. But yeah, any more questions, concerns, guys, or can we wrap this up here? Okay. Don't answer that, guys. He has to go watch the YouTube videos. Don't answer that, guys. The disruption is okay, but this is YouTube material, bro. Lock in. Yeah, lock in, bro. Lock in, lock in. But yeah, YouTube or the book. The book has everything in one place, and the YouTube, I don't think I've made videos on disruption on YouTube. Honestly, I'm too lazy, man. If I'm being honest, too lazy. But yeah, I'll probably upload this on YouTube. Oh, and the refined course. I mean, I think only structural disruption. I don't think order flow disruption is on there. Okay. Oh, true. Yeah. Oh, bro, I'm a lazy fuck, man. I'm a lazy fuck. Let me tell you. This comes out. Oh, this comes out today. I might go watch that this weekend. But yes, playlist. The 2024 videos. Here. A lot of these, I think we do cover like everything, right? We do cover everything on these. Let's see. Okay, so this is technically right. Not really. The LG is here, meaning you sell here, TP here. But if we're looking at this directionally, high, low, this is then broken. That's a CBOS, meaning you're still bearish externally. So this is all a pullback. So you have the pullback, but internally you have low, high, this. Then once this breaks, then technically you have disruption, but the invalidation of the bias is here. So this is one of those scenarios where you want to ask yourself, do you want to minimize the stop before, or do you want to maximize risk to reward, sorry, with having a smaller stop, or do you want to be conservative and have the full invalidation? And it also depends on when this happens. I don't know what time this is happening. Like, time is a very big thing. Time is a very big thing. So I only trade overlap / like the end of overlap. I don't trade Asia. I don't trade London. I would love to trade London, but I'm not staying up till 4 in the morning. I don't want to trade Asia. This is an outside session. So this is like the end of New York, I'm guessing. So here you have low.
Yeah, it was like 2 hours before New York closed.
Yeah, okay. So this is low, high, CBOS, retracement. There is a potential move here, but this is technically unwillingness because you have this order flow here. So this then breaks. So this is now unwillingness, meaning you're bearish. So you would need for this pullback to fail to then be bullish. So this one was a bit early. Right, and actually this actually hit the sell, the buy to sell, sorry. Here. Hit the buy to sell. So you have unwillingness, break, come back into buy to sell, and you probably aim for here. No, I wouldn't call that a sweep. You're forcing that. You're forcing this. You're forcing this. Disregard this. Look at the direction. Low, high, retracement, CBOS, unwillingness, break, high, low, retracement, down. Yeah. Yeah, I don't know. This is something that I find very hard to teach or explain. It's just like stop focusing on the micro moves. Just look at the whole picture. Like it's like it doesn't even matter for the time frame. Let's say this was H4, then you're focusing on an M1 transition. This is kind of what I was trying to tell the guy from earlier. You have an M1 transition on an H4 bias. Bro, that's just to begin the pullback. Like that's not to give you the whole move. You have to look at what you're actually given here, which is low, high, low, high, low, high, And the reason why I use that is because this is the first time this is solidified, and this is the final solidified low. That's why I use this range.
Yeah, that's why I use that range too. So I needed it to continue higher.
But
But it's,
you have to consider this.
the reason why I didn't consider that is because after the CBOS, it never gave a confirmed low.
Yeah, it didn't
Yeah,
break the
I would
structure.
need that to, yeah.
But
So that's why I said I use the POI down there because the retracement wasn't confirmed.
but if we were to zoom into, let's say, a M3, then there's structure break here, maybe.
I think I think the next image I sent you is M1 or something like that.
Okay.
Yeah, that.
Okay. So let's see. Let's see if there's a scenario here. Bearish. Okay, there is CBOS, maybe high, low retracement. There is a break here. Oof, but then this is like new day, no?
Yeah,
Yeah,
when the market
I'm not looking
closed.
at the charts here. I'm not looking at the charts here. I'm not looking to
Yeah,
enter when the new day is about to start.
yeah, that was my mistake too, and it was a Wednesday, so I got like a triple swap.
Yeah, bro, you don't want to
So
get the triple swap, man.
yeah,
Yeah, fuck the triple swap. But yeah, once it's coming the new day, bro, just move on. It's okay. There will be another day. There will be another setup. There will always be another setup.
yeah, I was forcing this one, and it resulted in like my only loss this week.
No, the trail stop here is fair. This is good. You should have trailed your stop here because there is a break. There's a CBOS continuation.
Yeah,
Yeah, definitely outside session. You're in a range, bro. You're in a range. Don't even. This is why I don't. No man's land. Stuck in a range. This is why we trade in trending markets, not in consolidation. Screw the consolidation. You can maybe get trades in here, but it's not worth my time. I don't care for it. But yeah, I'll leave this here again. Don't get caught up. Don't get caught up trading the range. There's no point. No point. Eventually, you will get a loss that you don't understand, and you're gonna start messing up your psychology. There's no reason to. All right, guys. I guess we can call it here. An hour 40 is not bad. I'll probably upload this on YouTube a year later. But yeah, when you leave schematics. When you leave what do you mean when you leave schematics? Like when you like stop using them?
Yeah, when you stop trading schematics,
Yeah, like
you don't have
it's,
much
it
to
it does make
interpret
sense.
them.
Like, but the thing is schematics are different. Like, let's see. Like, look at this. This one. This is the picture. Right, like yes, there are ranges, but this is a trending market. This is more important. This is why direction is important. You can't understand direction if there is no trend, right? If there is no trend, then screw the rest, man. If you're just trying to play within the range, then you're probably gonna lose. Right
Yeah,
here,
that's what
if you're
I'm in the
playing,
range.
like if you're stuck trying to use this, okay, you're probably gonna mess up. But if you have a
Yeah.
narrative and then you have a model and then you execute, then maybe there's the target.
Yeah. Yeah.
But you need a trend. If there is no trend, then like that corny quote, like the trend is your friend. Like that is the first thing all traders learn, and that's the first thing that people disregard. But yeah, I guess we can call it here, guys. Other than that, feel free to send me any journals if you're in the group, obviously. And I do have some announcements coming. I'm still working really hard to get this stuff going, but yeah. Other than that, we have some big announcements coming. Like I said, I don't want RCV to be a crutch, so definitely give me like a couple more weeks, and I will show you guys what we have been working on. Inexpensive, convenient, straightforward. You guys know how we operate. So other than that, I'll see you guys in the next one.